theme, which is, from my research, it totally seems that this war is just another way of cutting off Russian energy and protecting the U.S. dollar. That's my big thesis, and I believe it's supported, especially with some of the more current news. But to put a recap on the story, prior to the Ukraine war, Russia was, sending roughly half of their oil export. Oil and energy makes up 52%. So coal included, liquid natural gas and oil, crude oil, make up over half of their exports. Half of that, over half actually, was going to Europe. And so that was cut off with the war. And even during the beginnings of the war, many Europeans, Germany in particular, were still using oil energy. So, there was Nord Stream that happened. And now today, there's some export to the Balkans still, even through the current war zone. Actually, Ukraine, it's pretty controversial. Nobody really talks about it, but Ukraine does facilitate some oil export for Russia. Basically just making sure that they're not hitting any of the oil shipments, and the oil is getting to where it's going to. And it should be noted that there's been some sanction waivers due to the strait, that the United States is allowing some Russian oil out. And we'll get to that in a moment, but we're just going to recap the theme in case you don't want to go back and listen to the other video, especially. And I doubt anybody's really even listening to this part. But for those who might be, here's the breakdown. So, following the war, Russia made new ties, specifically with India, not China, but specifically with India. But right now they're exporting to Turkey, roughly 10%, India 30%, and then China like 40 or 50, and whatever remainder is going to, minuscule random countries like the Balkans, and their shadow fleet. And that, it's a lot tougher to figure out what their actual shipments are. But that was pre-Hormuz, and it still is pre-Hormuz levels. And throughout some of my research, I found India actually put a lot closer ties. And forget about the north-south corridor. That was kind of hot garbage. I'm kind of upset with myself that I put that out, but it's going to stay up. Just note that I was wrong. It's mainly dry goods. It's nothing worth our time to discuss. It's important to note that there's a supply route there so that we can kind of monitor that and see what goes through. But as long as the strait's closed, it has no real effect anyways, because Iran has enough oil. They don't need any Russian oil from what I was reading and seeing. They're a net exporter by far, and they send a lot of their oil to China. And we'll hit Turkey just because it's quick, but you can already see like the hyper-westernized opposition that came out of nowhere. I know that Erdogan and Trump apparently have good personal connection, but as far as the government's concerned, I'm sure that there's hyper pro-Western organizations who are making sure that our oil interests are protected, and Turkey is no exception. So I think that's why you're seeing a lot of the influence on the opposition party. It's weird. It's like Erdogan's fairly Western supporting in a lot of ways. And then you see that there's another faction that just happens to be hyper-westernized. So I don't know. I've just seen too much to know that I would say that there's probably some American influence specifically to avoid any oil, any more oil or energy relations between the two countries. So then we've got India. India is a very important figure. So Russia already had a trade agreement with Turkey and with China. They were exporting their oil fairly regularly between the two. However, India is the new player, and what makes India different than, and I should have looked up what India's pre-import was, who they were importing from, but what makes India different than either one of these countries is that India, their part in global trade is refinement of petrol products. And that's extremely important. So they're a net importer, not just for energy needs. And this is something that everybody should be aware of. Some countries import refined energy in the form of, diesel, gasoline, aircraft fuel, and when you take crude oil, there's many different products that you can make from it, because there's a lot of different byproducts that come from the refinement. I believe there's like seven different layers of refinement, or I shouldn't say layers, but 7 different refinable attributes to oil. There's a plethora, which is important to know. And so like Russia, again, I should have just done this because I took the break. I should have just looked, but I believe Russia's at like less than 10 refineries. Notably, one is half owned by India, or India owns half of it. They're the only one that I could find from my research. So India has very close ties now with Russia. But yeah, Russia only had, and they have a ton of oil fields, and they produce enough oil that half of their exports are energy based. And I believe it's a quarter specifically is crude oil. And India imports that, and they have 23 separate refineries. So they've built up their country's infrastructure to support oil refinement as their gross domestic product. Specifically, they do a good portion of aviation fuel, which is also very important. So, and it's their second biggest product behind car parts and cars and manufacturing and machine parts. So their second biggest factor for their GDP is petrol products, and they're a net importer for petrol products. And if you look, they're right at the gate of the Strait of Hormuz. They were obviously taking a lot from the Strait, and then what they were doing was they increased their profit margins by buying cheap Russian oil. And we're going to go really quickly. So this is where I'm going to take a side note and go through some of the vocabulary. So oil is broken up in a few different ways. You have sweet, sour, light, and heavy. And, well, you have medium, but light and heavy. We're just going to keep it very, very simple. So sweet crude is, and sweet and light basically refer to how easy it is to refine. Maybe I'm not going to get into the super specifics, but sweet and sour refers to how much sulfur is in it. Light versus heavy basically refers to how easy it is to refine because of the other impurities. And Brent in particular is important because Brent comes off of the Norwegian coast, and it's just one of the easiest refinable sources of oil that we know of. WTI, West Texas something. Of course, I just can't keep West Texas Intermediate. That's also important. It's like one of the second best refinable oils, and then it just kind of goes down from there. The Ural is the Russian equivalent to the benchmarks, and it's not as easily refinable as Brent or WTI, but it's still kind of up there from what I understand. And there's a market for the refinement of these goods. So it's just the precursor, similar to how India has such great soil for rare earth mineral deposits, but it's China that refines those into usable magnets and other things like that. I really only know the catalytic converters would be another one. So India has a great deposit of rare earth minerals rich soil. China has the infrastructure to process that into goods, usable goods. Russia has great crude oil in the ground. India has a great refinement base and infrastructure to make usable oil goods. So that's how you need to look at this, how you need to look at this situation. So just because a country has a lot of oil doesn't mean it just turns into energy like that. It needs to be refined and processed. And there's parts of the global supply chain that make an effort to do this better than anybody else, and India is one of them. So India has this great profit margin, and just so you know, so we went over sweet, sour, what that means, how Brent is the best, and that's why you hear when people talk about Brent oil, what oil's trading above or below. Russia was trading at the early onset of the war at a $25 to $30 a barrel discount to Brent. And that doesn't reflect the quality of the oil entirely, because it's there's always been that quality difference. But and I believe the quality difference on average it's saying here is, or that's current discount, but I believe that it's historically been $1 to $3 has been the Russian discount to Brent is $1 to $3 a barrel. So it's trading at 25 to 30 of relatively easy to refine crude oil. Relatively, if you're looking at the list, for the most part, you know, the long and short of it, you're always going to need refinement. It's just sometimes it's easier, and I'd want to see what specifically all of their oil, because they have a few different oil sites, but whatever, we're not even going to get into that right now. Maybe I'll do some deeper research on that eventually. But they've been at a steady discount, $7 to $8 discount recently. Well, the war in Iran happened, and again, I absolutely think this was to leverage, basically say, all right, the U.S. wanted to say, all right, India, China, you guys want to do business with Russia and their oil and their energy and not us? Well, you're going to see what the cost is to doing business with Russia and their and Russian energy. And basically, we put them in a spot where they had to be committed to Russian oil and Russian dependence over U.S. oil and U.S. dependence. And we put the heat on them pretty hardcore. Again, we all understand now that India has a vested interest in Russian oil through the plant that they own up there. And as this was happening, the U.S. had allowed temporary waivers, and Russian oil traded at a $7 to $8 premium a barrel, and India was forced into buying this oil at a premium, and they were getting slammed. And remember, their exports, their GDP depends on their oil exports, or at least a good portion of it. So not only were their exports going up relative to their competition, which would be also something to note, because they're the ones that are buying sanctioned oil. Everybody else is buying, fair trade oil. So India, who's exporting oil-based products, is now, beholden to Russian oil prices trading at a premium to Brent. Oh, don't tell me. I don't know if you can hear that or not, but I just want to get this video done, so I'm going to go through it anyway. So, pardon the interruption if you didn't hear that. It sounds like somebody's drilling or something. So they're trading at a premium. Right now, it seems that they're trading at a $2 to $3 discount. I see where I was probably getting that wrong. They were probably trading at a premium earlier. Because they were more expensive to refine down anyway. So, whatever. Look, there's a lot that goes into that in the pricing. So forgive me if I'm wrong and I'm not getting these facts entirely correct, but these are the facts generally as they stand. And this is this timeline that matters. They were trading at a discount, then India was forced to buy at a premium. And then on top of that, the U.S. put even harder restrictions on them by saying, hey, look, the waiver's coming due. So it's pretty unclear right now if India has moved to Russia's shadow fleet, but basically the United States has threatened sanctions on portions of India in some ways, and saying that, look, hey, this agreement is waived. Like, you can't really buy any more Russian oil. So it's really unclear, very unclear from what I was looking at. And maybe, there will be more clarity next week after the dust settles on India, but it's not talked about, and it is important. It's very important to their economy as well, the price of oil. They're very beholden to it. Same thing with China. China is beholden to the Strait, and on top of that, they're very dependent on Russian oil. And I went through and kind of pulled out some of because they're the bigger story. India is a world power. They have a seat at the table, but they are not a superpower in the same way China, Russia, and the United States are. So China's really been the big question. They've unapologetically been taking Russian oil, you'll actually see, I feel bad. I was kind of speaking out of turn. I didn't plot in the infrastructure that I needed to fully understand the Russian picture, and I kind of spoke way over my head with that, so I'm sorry. But, I'll pull that map up too with some of the imports and exports. But when you look at the map, and you can probably see it right now, there's the ESPO pipeline, and then you have just the standard Russian crude oil pipeline. I don't think it has, well, I'm sure it has a name, but it's not the endeavor that the ESPO was. But you can see, and of the map that I have, there's other maps that show the smaller pipelines that branch off of these. These are the major ones. There's other smaller pipelines. And yeah, the Russian oil is being literally pumped straight into mainland China and Beijing. So, it was very foolish of me, and I'm sorry about that. Hopefully everybody can see that I did a really good job on breaking down Iran, and maybe I was onto something just intrinsically about Russia, but I did get a lot of stuff wrong about their supply chain. I still maintain the theory, because you can see what the fallout was specifically with China. So anyways, yeah, you can see the Russian infrastructure that just pumps oil into China. It's there, and it's heavy. When we look, Russia's number one importer of their oil is China. And China imports mainly Russian oil at 17.4%. The next highest is Saudi Arabia. Iraq is at like 12%. Saudi Arabia is at 14%. And there's not really, well, we have officially Iran does 5%, but it's likely higher. There's some contention around purchasing Iranian oil. So we know Iran sends 90% of their oil to China. And maybe we could figure out like an unofficial, because China's not claiming that they've received that much from my understanding. So it is what it is. But anyways, it's important to note, yeah, China mainly imports oil from Russia, and they're diversified, don't get me wrong, but their number one exporter, or the number one country they import oil from is China. And China is Russia's number one oil provider. So we're at an interesting crossroads with that, because like I had mentioned, what do you think Trump was going to speak with Xi Jinping about when he's saying, yeah, look, we want you to do energy we want you to do energy deals with the United States, obviously. That can put to bed this whole yuan thing, trading in the yuan. They're our greatest threat to the US dollar. And yeah, it's just like we're very close to owning all the neighborhoods on the monopoly board. That's like the best way to look at it. And what are you going to do when you're able to get that last house on the last street and start building hotels? Iran, China, and India and Turkey are the last spots on the board that if we can seize those spots, then basically we win the monopoly game between us and Russia. So that's a really important thing to know, and I just think it only further validates my theory, because Trump came out following his state meeting with Xi Jinping saying, yeah, they're going to buy energy from us, and there was a for sure deal of a $43 billion liquid natural gas deal between us and China. But Trump also came out and said, yeah, they're going to buy oil from us. Now China, and here's the thing, you do have to take some things with a grain of salt, but I don't know, I just see enough pressure being involved with the way things are right now that I think that this actually really did come to fruition. And China borders Russia, so Xi Jinping basically was like, we made a structural agreement. Trump's saying that it's set in stone. And you got to think about Xi's position here. He's Russia's number one buyer, by and large. Russia is very dependent on Chinese business. And if Chinese business slows down, that's an existential threat in a lot of ways to Russia, especially because they've invested so much money in infrastructure to supply China with oil. They border Russia in a lot of ways, with exception to Mongolia, breaking up two of their focal points. And then again, they're basically access to having any significant, and I wouldn't say basically any access, maybe that's a little bit too much, but a significant portion of their GDP depends on Chinese business. So for China to even be hinting that they're going to step away and limit their exposure to Russian oil is a humongous blow to the Russian economy. And then with Russian oil being expensive, or at least we can turn up the heat, and basically at this point we in a lot of ways control the price of Russian oil. It's almost a no-brainer once again. So now that I have had a little bit more time to research, I really can a little bit more confidently say that, yeah, this, even though I was wrong about maybe some of the methods of Russian export, I definitely think that I'm right in the sense that a lot of what we're seeing right now, this Middle Eastern conflict, is because of that. And the Red Sea is not safe passage also. So let's kind of shift gears a little bit. I've made my case that China is stepping away from Russia, and also, just so we're all on the same page, we all know plastic's important. We all know plastic out of China is extremely important, because everything that has made in China in it is almost always plastic, you know. So we have also cornered that part of the market in regard to China. We are the number one ethane supplier to China, and I believe we're the only supplier, like we made that agreement, that they only buy ethane from us. And going back to what I was saying, how oil is refined into separate products, ethane's one of them, and it's actually the precursor to plastic. And obviously China deals with a lot of parts, they deal with a lot of chemicals, they make, create, and produce a ton of plastic. And that could be probably its own video, the Chinese supply chain to creating plastic. That might actually be a really interesting video just to do on its own. So anyways, so we'll shift gears now and talk a little bit more about how Russian oil is affected by these trade routes. So, the ESPO pipe, China's pretty self-explanatory. I'm just going to make a quick comment on the Druzhba pipeline. It's the friendship pipeline, and it's still being utilized in some ways, and Ukraine does facilitate some of the oil that transfers through there. But you can see here this lightly dotted red line. It's lightly dotted for a reason. So, and I'm really upset. You're probably looking at this. Maybe I've added the stuff, but I don't know. There's just been so much work that's been done to this map that I really just don't feel like doing much more right now, especially because I just want to get this video out. But you can see here, I'm probably showing you like the Black Sea route, and I'm definitely going to just have to zoom in. So there are a couple different ports in here, and a significant oil terminal right here in the Black Sea. And with the war going on, even though Ukraine is allowing oil, from what, again, my understanding, they're allowing some oil to pass through their land in particular, the oil that is leaving Russia through the Black Sea is basically like a no-go. They've deemed it fair game, it seems, to hit their oil infrastructure as far as passing through the Black Sea. Now, the second part that they have a problem with is there's this emergency route that passes straight through the Suez Canal into the Red Sea, and then passes down through, forget the name, I don't even know if it has a name, probably does, it has to, but whatever straits down there by Somalia and Yemen, it passes down right through Djibouti and over to Mumbai, right? That was the second route that they had. That was their emergency route. That's cut off because of the Houthi conflict. It's just not safe to go through. So even if they were able to, at scale, send ships through the Black Sea, it's not going to go through the Black Sea, or it's not going to go through the Red Sea, through the Strait, or through the Suez Canal. It's going to go out through the Mediterranean, passing through the Strait of Gibraltar, and then into this main line that you see. This main line would normally pass through the Strait of Gibraltar, down through the Red Sea, and up into the Arabian Sea and the Indian Ocean. Even that isn't happening, again, because the Red Sea is cut off. So you can see, I'm looking at Africa right now, but maybe I can zoom out a little bit further. Well, no, I'm just going to go straight up. So the only other port that they can send oil out of, well, there's a couple, but the only port of significance, because most of their oil infrastructure is to the west of Russia. That's important to know. Most of the oil infrastructure that they have, most of their infrastructure in general, is much closer to Europe than anything else. So you can see here, they have the Murmansk Arctic Terminal. And this is where they export much of their shadow fleet, much of their oil. And it either has to take one of two directions. So for India, it needs to follow down the Norwegian coast, around the Cape of Africa, South Africa, up past Madagascar into India. And the fuel costs to do this also raise their price of gas and reduce their profit margins, along with making their oil more expensive when we want to sanction it. So then the only other route that they have to go for China is they need to pass up through the Arctic, through whatever icebergs and challenges that they have, and they do have a lot of icebreakers. They're well equipped to do this, but it's still a pain in the ass, or pain in the butt, and they have to pass all the way down through the Bering Sea and into China for any of their maritime oil exports. And I do wonder what the logistics are, how often they really need to make that passage, but it is being done. We know that. Now, to what significance, I'm not sure. The more significant route for them is the route to Mumbai, where they have to pass all the way down through South America, and then back up into the ocean, because effectively that whole area is just cut off from sea trade. And the only, their biggest buyer, or their second biggest buyer, is India. So really, we've put a huge cost on them to ship their oil to the people that they ship it to. And really, the only person who has an easy play right now is China. And obviously, we have our thumb on the scale with the majority of their energy coming out of the Strait of Hormuz. So it's a lose-lose. It's like, all right, they have ample access to Russian energy, but that's it being tested greatly. And with the United States just showing India and China the cost of doing business with Russia right now, we're seeing that maybe this Iran thing is a lot bigger than you would initially think. That there's a lot more to do with protecting the United States dollar, the petrodollar, than anything else. So that's been my big assumption. That's kind of the big story that I've been following. And just to kind of recap everything, I don't foresee the conflict ending in Iran. It's just kind of a sticky situation. Once you touch it, you can't get it off your hand easily, or if like gum, you step in gum, it's hard to get it off of your shoe. And then along with that, it only strengthens the U.S. energy case, because we're still able to net export. And I did look into this. We are a net importer of crude oil, only because we're a net exporter of oil-based products. So we do have some refinement capability that we do include in our GDP. So that was that nuance that I was talking about last time. So it's 6 of one, half dozen of the other. It could be anything. I could be wrong, but I just don't think I am. Obviously, maybe that was a little bit too proud. I could be wrong. And I'm sure there's multiple different factors that we just aren't privy to as to why things are the way they are. And And I think I remember I was looking into Russian provocation, and that's how I found that whole thing about what's going on in Cuba. So, and that's very significant. And I guess a couple points on that for the people who are watching this, because I said watch my video. Obviously, this had nothing to do with Cuba or what's going on there, but it is, again, it's an important note. It goes to show that even though a lot of times the United States gets a lot of flack for their imposition on other countries and other markets, there is some Russian instigation that we're just not privy to. And I live a very busy life. To do this is very time consuming, but I enjoy it and I think it's important, and I wouldn't have it any other way. But that is to say, I can't easily research all these different topics that I want to. That's definitely on the list, to kind of see maybe what some of the precursor instigations were for the pressure of having Ukraine join NATO, and maybe all it was just this was the conflict escalation ladder for us to ultimately, excuse me, this was the conflict escalation ladder we had to ultimately corner the market, corner the oil market, and kind of supplant the United States as the world's superpower. Because if we can do that, if we can cut off Russia's crude oil, make China dependent on our energy, or at least playing ball with us to have energy, then that secures the United States for a long time. So that's like the big deal. I really think that that's like the main strategy around this. And if you look at the oil market, you look at the numbers, you look at the geography, it just kind of all points to that direction. And we did hit the unipolar moment. And a lot of people have said, well, what did we do? What did we do at the unipolar? And the unipolar moment, for those who don't know, is when the United States stood alone as the world's superpower and had control over the world after the fall of the Soviet Union in the 90s. And, personally, and I guess I'll give a little bit of commentary just because, we got enough battery, been doing this long enough, and I'm almost positive nobody's made it this far. But if you have, you can learn a little bit about me and how I feel. And this will probably be for like 5 minutes and I'll wrap it up. But yeah, I definitely am a peaceful guy, don't believe in war. I think a lot of this stuff's tragic. It really is gut-wrenching. I think human life is worth so much more than this. Petty oil plays. And I get maybe, like, you could argue the significance of a lot more people would die if the United States isn't in power. Because, yeah, it's true, back in the day, war powers like Rome is a great example. Rome imposed their will through war. Mongolia imposed their will through war. And ultimately, it was a deciding factor on why they couldn't sustain themselves. The United States uses a much more softer form of that through the dollar, through trade. And we have seen the most peaceful era, technically, as far as the world's concerned. So, these could be seen as potentially necessary evils. And I'm an idealist for sure, mainly through my faith. I just don't see it really any other way. If everybody could see it the same way as I could, or as I do, we, wouldn't be in these situations. Unfortunately, evil is real. Is real, not to be confused with any Middle Eastern countries. I'm not making any type of dog whistle there, but evil is real, and maybe these are necessary evils for the greater good, but I just personally can't subscribe to that. So yeah, it is what it is. We'll see how it plays out. But with that, that's the show. If you made it this far, thank you. If, hopefully I mean, I'll be honest. I'm a little bit worried with what happened with that one video. To the tech overlords who are part of making this digital infrastructure. I promise. I'm just trying to sell my business here, get the word out. But to anybody who's listening, I know it's probably a small amount, but maybe, hopefully one day I blow up and become like a big superstar and have a big business and stuff like that, and maybe this has some super fans come back to look at the early days, because these are the early days, and I really do hope that I'm wrong about any type of ground invasion. But again, some of the signals for that, I don't know, but we'll see. I think I already have a decent enough track record, because I was pointing out that might be an area of conflict moving forward. So yeah, so if you made it this far, I'm wrapping up. I gotta get done. I'll talk all day long, especially when it's the easy stuff like what I think and not hard facts like what we're going over. Yeah, share this, like, subscribe, definitely share it, chop it up, do whatever you want, try and get it out, try and get the word out. I think a lot of what I'm saying is factual. And if you do want to do business with me, and you're interested in seeing what it's like to be a client, please give me a phone call at 267-835-2403. Email me at nathan@atlanticfinancialmngt.net, or email, phone call, text, DM, any of those. And we'll talk about what might be right for you, what situations we might be, or what strategies we might be able to employ for you. But for everybody else who is, maybe going to sleep at this point, or just getting home, or doing whatever you're doing, it was a pleasure to have you all here listening to what I have to say. It's a great honor. And I hope everybody has a good rest of their day. Have a good one. Bye-bye.